makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm not Francine Lacqua, I'm Tom McKenzie, stepping in for Fran here in London, of course. Now, Donald Trump has given himself 2 weeks to decide whether or not to strike Iran, saying he wants to give diplomacy a chance. It is a week since Israel began its attacks. Overnight, an inactive nuclear reactor near the town of Iraq was hit. European and Iranian diplomats are due to meet in Geneva shortly, while the US president will attend a National Security Council meeting later.
I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks."
OK, let's bring in Bloomberg's Jemana Pasechi joining us from the region. So, Jemana, Trump remains undecided. There is a 2-week window, it seems, for diplomacy, and yet hostilities continue on the ground on both sides.
Yeah, well, what we are getting today is the U.S. administration, President Trump, is stepping away from the brink. Remember, 24 hours ago, it seemed as though military intervention from the U.S. perspective was nigh, that it was going to happen in a matter of days. But now he's opened the window up to diplomacy, to those negotiations. And also the press secretary, Karoline Leavitt, adding in those comments that if there's a chance for diplomacy, the president is always going to grab it. On that front, we know that the Iranian foreign minister will be meeting with his counterparts in Geneva. He's actually just landed now in Switzerland a short while ago. He'll be meeting with the UK, German and French foreign ministers. But he also said in comments just a short while ago that they're not willing to engage in discussions so long as Israel keeps on with their attacks. So it will be interesting to see whether a window can be carved out for the Iranians to start speaking directly to the US in the absence of some sort of halting or at least slowdown in intensity on the tit-for-tat strikes and those hostilities that you mentioned, Tom, because there really is no signs of abating. And actually, after an Iranian missile managed to intercept Israel's air defense systems yesterday, causing significant amount of damage in a hospital in southern Israel, the Israel response has been very vitriolic. The defense minister is saying that there is no room for the Ayatollah to exist, that they will strike back hard. And therefore, in the next couple of days, we're expecting quite a significant response from Israel on Iran. The attacks on the centrifuges and these nuclear sites continue as they continue also to try to eliminate Iran's ballistic missile ability as well. They say that they've taken out about 2/3 of those missile launchers. That's per the Israeli military.
Yeah, and of course, Israel has targeted hospitals in Gaza multiple times, though it says, of course, that it's been targeting infrastructure of Hamas during those operations as well. In terms of Iran's proxies and their allies in the regions, the groups for which they fund and support, what can we expect in terms of the response? They've been relatively quiet so far, Jemana.
I was just checking one of the Lebanese news channels, and the Speaker of the House, Nabi Berardi, he's a man who's been in Lebanese politics for a very long time, quite closely allied politically to Hezbollah, just said, I am 200% sure that Hezbollah will not get involved in this war. Iran doesn't need them. Now, that's one way to frame it. But of course, Hezbollah are operating in a much diminished capacity in Lebanon since the war that was that they engaged with Israel towards the end of last year. Their own arsenal has been debilitated. They've lost about 70% of their capacity. Again, their command structure has been decimated, their leadership structure, they have less political clout within the country. And also the U.S. ambassador to Turkey and special envoy to Syria, Tom Barak, was in Lebanon yesterday, also sending a warning to Hezbollah, saying there will be grave consequences if they dare to get involved in this war. So a lot of pressure being applied there. Houthis have been quiet since the truce that was agreed with the U.S. about a month ago, but that doesn't mean things cannot intensify if the U.S. decides to intervene militarily. Of course, Hamas on the back foot as well, with the war in Gaza still going on. And then the final area to watch is what those Shiite militias in Iraq, the ones that are closely allied to Iran, Kataib, Hezbollah is their name, what they have to say. So far, they've been quiet, but they have also said that they would strike back at U.S. assets should the U.S. be seen to getting involved militarily. So there's a lot at stake, but perhaps the proxies are not really in the mindset or don't have the capacity to fight back. But if the U.S. were to get involved, then maybe we'd see a different picture, particularly from Iraq.
OK, Bloomberg Horizons Middle East and Africa, Jemana Basecci, of course, with that update in terms of the conflict that continues between Iran and Israel. Meanwhile, Iran's foreign minister is set to meet counterparts from around Europe in Geneva today. Let's get more from Bloomberg's Oliver Crook, who's watching what is happening in terms of the international diplomacy on this question, on this conflict. Ollie, what do we expect to come out of the meetings? What are you going to be watching for in terms of the mood music, in terms of the language, and whether or not the needle can be moved in terms of getting closer to a diplomatic solution?
So let's set up who this conversation is with. It's going to be the Iranian foreign minister who's arriving in Geneva to speak with his counterparts from France, from the United Kingdom, also from Germany, as well as the EU High Representative Kaja Kallas, in order to begin to have sort of diplomatic discussions. It's the first time that they've actually met in person over the last week. They spoke a little bit earlier in the week on Monday. They didn't get any sort of high breakthrough there, but that was, of course, at the height of the bombing campaign and the sort of confusion about what would the sort of next steps would be. We're now in a position, as we've heard from the President of the United States, Donald Trump, there's been given a little bit of runway for diplomacy, and this is one of the avenues where you may be getting that diplomacy. Just about an hour ago, we got a couple of headlines from the Iranian foreign minister that speaking to state TV, saying that basically they do not want to negotiate with the United States while the Israelis are striking, and he's saying that instead they will only hold the nuclear talks in the EU meeting. So that is potentially where that conversation can begin to happen. The best case scenario that you could get out of this meeting is you begin to get a sort of framework about what monitoring of the nuclear program in Iran could look like going forward, something that could potentially be shuttled over to the United States and the U.S. administration to have a look at and begin to have that sort of dialogue about a kind of day afterwards in terms of the future of monitoring the nuclear weapons program within Iran. There's also potentially discussions about drawing down ballistic stockpiles and sort of reducing them. These are going to be parts of the conversation. Of course, the issue, Tom, as we've discussed many times in the sort of era of Trump, is that the Europeans don't have a huge amount of leverage in the region, in the Middle East, certainly not on Israel, not so much on Iran. There's only so much sort of diplomatic clout that they have, and they only have so much diplomatic clout with the United States. So they can come, they can bring a framework, potentially that could be helpful to the Trump administration in determining next steps, but I would say that we wouldn't be expecting a huge breakthrough that would be led by the Europeans. Of course, if there's going to be a breakthrough, Donald Trump is going to want to claim the credit with his administration.
Yeah, so that brings me on to my next question, Ollie, which is really how closely Europe and the US are coordinating on this issue. Is there much daylight between them when it comes to how to address the diplomacy?
So what's interesting is you had David Lammy in the United States yesterday. He met with Marco Rubio. He met with Steve Witkoff, we understand, and they had a sort of conversation. And again, what we heard from David Lammy, which is what you'd hear probably from a diplomat, is that now there is room for sort of diplomatic exchange. The question of whether or not the Europeans are going to be able to exert any sort of influence on the United States, I think is fairly diminished, right? But there is a potential, there is a conversation in which, they could get some information from the Iranians. They could get a sort of framework. They could pass that on to the people that are close to Trump. And if they find that valid, it gets, again, in that chain of command, one step closer to Trump and potentially could have some influence over the decision. Where you actually have the sort of the Europeans and the United States aligned is on this issue of Iran. Where you have sort of distinction and sort of difference is on the question of Gaza. But broadly speaking, the Europeans and the Americans are aligned on the issue of Iran. So it's not going to be an issue in which the U.S. is going to be hypersensitive or very sort of wary of what the Europeans want. You will have seen, Tom, that the G7 overall, basically nobody has been critical of Israel apart from Japan, and all of the Western Europeans really do blame the Iranians for this, for them sort of bringing this on themselves, saying that they are actually the main actors of destabilization. And though the Europeans would like to see de-escalation, they've not been at all really critical of Israel and sort of its actions over the last week.
OK, Bloomberg's Oliver Crook, thank you very much indeed. Watching the events in Geneva as, of course, that diplomatic effort from the European side continues, and will continue to monitor lines as foreign ministers, of course, meet in Switzerland. Now, European stocks are higher this morning, as we've noted, with oil prices easing. We'll see how long that lasts after the White House dialed back speculation that the US was on the verge of launching strikes on Iran. With me now for a deeper dive in terms of the economic impacts of the geopolitics and the central bank action is Isabelle Mateos, Lago, chief economist at BNP Paribas. Isabelle, thank you for waiting patiently in the wings. I want to start with the central bank action because we can't unpick what's happening in terms of the central bank thinking and what's happening in terms of inflation and oil prices out of the Middle East. With the Fed and we'll start there in terms of expectations. The guidance, the forecasts are still there for 2 cuts in 2025. We know the FOMC are split on this question when we look at the dot plots. You don't think they get to 2 cuts in 2025. How much of that is down to the inflation story versus the growth story in the US?
Good morning, Tom. So you called it a forecast. I would say this is the median dot, and explicitly not a forecast. And I think Chair Powell was very careful and specific in describing the dot plots to tell markets and other watchers, don't put too much currency into it. And as you said, the FOMC is split down the middle. And if anything, we've seen a move of the dots towards no cuts between now and the end of the year. And I think this just reflects, I should say, pretty independently of the developments in the Middle East right now. That wasn't much of an issue of emphasis. The main worry in terms of inflationary pressures in the US is really from the tariffs, which until now we haven't seen much, if any, pass through into domestic prices. But the Fed expectation is that we're going to see more of that pass through manifest itself in prices from really this month. And we agree with that. And therefore, we agree with those dots that believe that it's going to be difficult to ease monetary policy in the US by the end of the year. But against that, it's really interesting that in Europe we saw just yesterday 3 central banks deciding to cut, and a pretty dovish hold from the Bank of England. And so it really illustrates how the US in a way stands out from the rest of the G10 in facing a domestically generated inflationary shock, whereas the rest of the world, has to deal with this uncertainty from the Middle East, but apart from that is looking at their own inflation dynamics and are pretty relaxed about them.
And to be clear, tariffs is the key driver right now, and should be the clear focus versus what's happening in the oil markets when it comes to the inflation question.
That's right.
In terms of, so we get no cuts from the Fed in 2025 is your forecast, okay? So that's your forecast. No cuts in 2025, no cuts for the year from the Fed. Does that mean you get more action from the Fed in 2026? Is there a catch-up there as the economy softens and as you get a new Fed chair?
Potentially. I mean, basically, there should be 2 drivers. So there could be 2 drivers to that. One is that, if the Fed has remained credible and the economy progresses as they expect, and we expect, which is to say a mild increase in the unemployment rate, then we shouldn't see any second-round effects. And so the one-off increase in prices from tariffs should be really one-off, and we should see a kind of spontaneous deceleration of inflation, which should allow and, in fact, ask for an easing of monetary policy. On top of that, if there were to be a more pronounced weakening of the economy, then the Fed would be in a position to cut very significantly. But I wouldn't call it a catch-up exactly.
How do we understand your view then? That the dollar further weakens from here. More weakness for the dollar, and yet you've articulated that divergence between the Fed keeping rates on hold at relatively high levels, not historically, but in the last few years, versus some of their international counterparts.
Yeah, look, the dollar is determined by multiple influences, and it's been very clear since the start of the year in particular that U.S. interest rates don't seem to matter all that much anymore. And I think that's consistent with the broader narrative of reduced U.S. exceptionalism, global investors rebalancing their exposures from a very overweight U.S. to look...
Where are we in that story?
Well, we're at the very beginning. If you look at the tick data, which was published just last week, and reflects the April flows, it's the first time since January 2024 that U.S. non-residents, so rest of the world, have been net sellers of U.S. assets. Now, you can describe it as a glass half full or glass half empty. And a lot of people have said, we are not seeing a rush out of dollar or rush out of treasuries. That's true. But, April was a month where you had very significant shocks to the market, to sentiment. And what you didn't see is a rush into the dollar. You really didn't see that. In fact, you had the private sector selling off treasuries. You had both private and official sectors selling off T-bills. And you had the official sector selling U.S. equities and mortgages, right? And so this is not the sort of business as usual market moves that you would expect. So there's some very strong undercurrent there of portfolio rebalancing away from the US. It's very orderly, it's very slow, but it explains this downward pressure on the dollar despite the rate divergence.
And briefly then, does that mean euro gets more market share as a safe haven?
That will depend also on what happens on the euro side. There has to be assets to buy. There has to be a lot of developments of a structural nature for the euro to really become a credible, I wouldn't say an alternative, because it's not going to displace the dollar, but to be a credible competitor, let's put it that way. It's going to take time. It's going to be slow, and we want this to be slow because, frankly, we want it to be orderly.
Yeah. Okay. So the euro as a challenger in a gradual fashion, as you expect further weakness for the US dollar, and just at the start of the journey in terms of reassessing how much exposure international investors want to have to US assets. Thank you very much indeed for the analysis across central banks and the geopolitics as well. Isabelle, Mateos, Lago from BNP Paribas, chief economist. Coming up, we're going to ask if a months-long rally in emerging market assets will continue as geopolitical tensions escalate. Partly that is down to those flows, of course, out of the US as well into EM assets. Can that continue? And which parts of the emerging market assets class do you want to be looking at to get exposure? That discussion is up next. This is Bloomberg. Welcome back. Happy Friday. Emerging market stocks slid this week as escalating tensions in the Middle East dim risk appetite. But looking further back, EM assets have had a pretty decent run this year. Investors are betting the rally has further to go. We're joined now by Alessia Berardi, head of emerging markets or emerging macro strategy, as I say, at the Amundi Investment Institute, but with a keen eye, of course, on emerging markets. Alessia, thank you very much for joining us in the studio. Let's talk about that run up then. Prior to this week, in terms of EM assets, does it have further to run, or is it now being derailed by the uncertainty out of the Middle East?
Yeah. So emerging markets have been supported by quite good fundamentals. Starting from the growth premium, the emerging markets growth premium have been improving vis-a-vis the developed markets, right? And especially in certain areas of emerging markets, such as Asia, the growth premium remains quite vibrant. We have been upgrading growth in Taiwan, in India, so growth premium in Asia is actually moving in a very good direction. Then, on top of that, we have a sound policy mix in emerging markets. So, monetary policy, fiscal policy. The policymakers in emerging markets have been doing a long journey to improve and to make more orthodox policies, and that is now reflecting even in reliability of these policymakers and then markets performance as well.
This is an inverse relationship now, because the emerging market policymakers seem to be taking the mantle from the US, that source traditionally of stability and smart policy making. But now we have concerns about the deficit blowing out, about the debt load in the US, about a tax and spending the bill that could add $3 to $4 trillion onto the debt load of the US. Is that inversion reflected in flows?
For sure, it's reflected in markets volatility. When we look the risk-adjusted returns on the fixed income side for US fixed income and emerging market fixed income, when we adjust the returns for volatility, indeed emerging markets are performing better. The volatility is higher for developed markets, and that probably reflects what you are saying in terms of perception of policy making. Do
you agree? Our former guest, BNP Paribas chief economist, Isabelle, saying that we are just at the beginning of this story in terms of fund flows and adjusting out of the US into other parts of the global assets story. Are we just at the beginning? Is that the right way to characterize it?
Yeah, I totally agree with that. We are just at the beginning, but this is a trend that has started since a while. It's not a new trend. But still, in the markets, in the flows, we have seen more appetite for emerging markets assets since the beginning of the year on the equity side, on the FX side, currency. Emerging markets currency have been performing quite well. But this is, let's say, a pickup in a more structural trend that is only at the beginning, I would say.
Do you have to carve out, right now, given the uncertainty in the Middle East and higher oil prices? Okay, Brent is down 2% in the session today. We're at $77, so not a painful level for oil in historical standards. But nonetheless, given the uncertainty, do you have to carve out the oil importers from your EM basket?
Still, I mean, at this level, as you said, I mean, this is not a war zone level, right? Still, it's a very decent level for both exporters and importers. But of course, with the Middle East events, what the investors are looking at is to what level the oil can go. And then you start to distinguish between exporters and importers, not only in emerging markets, even in developed markets, right? The oil price scenario that we have in mind, considering that demand is quite subdued, growth is quite subdued across the world. And we know that supply has been adapted by the OPEC more recently with increasing the supply. So we still have a fair value of the WTI between 60 and 65. That is lower with what we have today. But we see this risk as temporary for the time being. And because of these fundamentals, oil should return to the levels that we have in mind as fundamentals for value.
Tariffs have been imposed on a lot of EM countries, and they have yet to secure deals with President Trump. We know that the clock is ticking towards July the 9th as well, and that self-imposed deadline by the US president. You say, despite that, India, and I'm quoting from your notes to us, India is the steadfast winner in global supply chain shifts. India has not yet struck a deal with the US, and yet you are touting India as a clear winner.
Yeah, I mean, it's true. We don't have still news about the deal, but we know that this deal will happen in stages, as it normally will be, because you can't do really a very comprehensive deal in such a short amount of time, right? So we'll probably see this deal coming out in stages. But I think, or better, this is what we have been told by the US policymakers, is that in reality, for countries that are engaging with the US administration in making a deal, the tariffs level is not going to change on the 9th of July.
But is this also
right?
this is a rerouting story for India in terms of global trade?
Yes, but Indian growth is mainly driven by domestic factors.
Okay.
So Indian growth is driven by a very vibrant capex, and actually in Q1 and with the fiscal data up to April, we have seen capex catching up. So last year, India was worried investors because the capex was actually lagging behind in terms of targets with the budget targets. But now, in the latest months released for the fiscal accounts, we have seen a strong catching up. So the story is returning. Capex is back. India momentum is domestically driven, is actually gaining track.
OK, Indian momentum is there on the CapEx story. Thank you very much indeed for the analysis, the lens of EM space and the flows out of the US in terms of some of those asset classes benefiting as well. Alessia Berardi, head of emerging macro strategy at Amundi Investment Institute. Plenty more coming out. Stay with us. This is Bloomberg. Good morning. Welcome to The Pulse. I'm Tom Mackenzie in London, and these are your top stories. Happy Friday, everyone. The White House says President Trump will decide within 2 weeks whether the US will join Israel in launching strikes against Iran. Meanwhile, European foreign ministers are due to hold talks with their Iranian counterpart today. He tells State TV that Iran will not negotiate until Israel's aggression stops. Plus, SoftBank founder Masayoshi Son eyes a $1 trillion industrial complex in Arizona. We bring you details of our Bloomberg scoop. Let's return to our top story this morning. Donald Trump, of course, giving himself 2 weeks to decide whether or not to strike Iran, saying he wants to give diplomacy a chance. There have been reports that Trump vetoed an Israeli plan to kill Iran's supreme leader. That was earlier in the week, of course. And Gulf states are assessing the possibility of Iran's regime falling. Bloomberg spoke with Egypt's former foreign minister, Nabil Fahmy.
I don't know where regime change has actually worked before. And I would argue that even when it happened before, in Iran itself, by America over 50 years ago, the ultimate result was the regime went more towards an anti-American perspective than a positive one. So let regime change be an expression of domestic politics rather than that of foreign politics.
For more analysis, let's bring in Elizabeth Monier now, assistant professor at the University of Cambridge with deep expertise on this region. Elizabeth, good morning and thank you for taking the time. Are we in a position right now where diplomacy is getting closer to solving and ending this conflict, given the 2 weeks that it seems the US president is now giving himself?
Good morning. Yes, I think the whole world has taken a deep breath of relief overnight. This is good news. It's the most positive outcome that we could have seen after the events of the previous week. This does seem to suggest that there is a chance for diplomacy. It's still at the very early stages and there is still a lot of complications, clearly. The signals coming out of Iran are that defiance will continue, and this is very much in keeping with Iranian rhetoric and speech and the importance that they see in holding on to their deterrent. So it's very clear that they have to balance the need to really find a diplomatic solution with maintaining credibility, with maintaining their deterrent, and also preventing any possibility of domestic unrest as well. So I think this 2 weeks, particularly after this speech of the last couple of days, that we might be seeing US intervention within 48 hours is certainly a positive step.
And clearly the US have ramped up the rhetorical pressure in recent days, and they put assets in the region to follow through on that. So it's not just the rhetoric. They have the assets now in the region to carry out a strike should they choose to do so. Given the complexities domestically and internationally for Iran, how far do you think they could go, the Iranian leadership, in terms of giving up their nuclear program to get a deal with the US?
Again, it's a very difficult balance for Iran. There's a lot of narratives coming out, particularly from the region, that this will push Iran further towards the stance where they feel they need to have this nuclear weapon as a deterrent, now that the balance of power has changed so dramatically in favor of Israel in the past couple of years, really. So it's very difficult to see how these negotiations will go. Clearly, Trump's position is very much it's no nuclear program at all. How this will pan out is interesting to see. And I think that the rhetoric and the move of assets to the Middle East is very much about pressuring Iran and pushing Iran into a corner. But there is a question whether this will, which way Iran will go. Will it back down or will it just go to the other extreme? I think it's going to be one extreme or the other. The other problem with starting with these kind of threats is that very much empowers those in Iran and across the region who see a nuclear weapon as a necessity, as a deterrent, and particularly with this new belligerent Israel sort of in the region, that this could actually, very much backfire. And given the history of complicated relations between Iran and the US, going back, as the previous speaker referred to, the coup engineered by the CIA at MI6 in 1953, this coup and brought back to power the Shah, empowered by US. This is not history for Iranians. This is very much in their strategic thinking. It's very much at the core of suspicions and lack of trust towards the US. And so going into negotiations with even greater broken trust, it's going to make a diplomatic solution very difficult, but it's a necessity. And I think it will be a necessity for Iran as well.
So that historical prism is worth thinking about as we consider what can be achieved with diplomacy. Elizabeth, there is an argument being made by the hawks around President Trump. I'm thinking of Lindsey Graham specifically, who's been pushing for the US to involve itself more directly in this conflict with a strike on the nuclear facilities of Iran. There's a narrative that this can be done pretty efficiently, pretty cleanly with bunker buster bombs. You're in, you're out, you take out the nuclear facilities, the question is solved once and for all, and we're done. Is it as simple as that?
I don't think anything is as simple as that, unfortunately. For a start, there's splits within Trump's camp. I mean, we've clearly seen in recent days that the support is not fully there behind this idea of a single strike, taking out the nuclear program. So, that position would weaken Trump anyway. It would complicate things in the region very much. It's no guarantee that it would take out this facility. And I think that kind of strike, the legality also is in question. The IAEA has questioned or pointed out that attacking peaceful installations is a violation of international law. So it brings in many, many complicated questions. There's also the issue of potential radiation leaking from these sites after these attacks, which then affects the region and America's partners in the region. So it's definitely not that simple, unfortunately. And again, that kind of strike will make Iran and other countries in the region sit up and take notice that, if we don't have a bomb, then we can actually, be subjected to such an attack at any time.
A lot of the analysts that we've spoken to in the last week have suggested that the Iranian regime is at its weakest point that it's been in decades, arguably ever, for the current regime. If there is quote unquote regime change, if the regime collapses either internally or through international pressure, is there a framework? Is there a foundation in terms of other political leaders or parties that can either come back from exile or domestically fill the void? Is there an alternative leadership essentially for Iran?
I don't think so. Clearly not anyway. I mean, yes, I think it's true that Iran is at its weakest. It's lost, a lot of the deterrent was about its proxies in the region, particularly Hezbollah, which got spectacularly taken out by Israel. And now we're seeing that the missile program is perhaps not as strong as we suspected. So Iran is definitely weaker. In terms of opposition in the country, it's very unclear what opposition there might be. The supreme leader has been in power since 1989, has a very strong grip over all the institutions of government in the country. It's also difficult to tell how much domestic support there would be for regime change. Clearly, voices outside of the country in the West, the Iranian diaspora, for example, really look towards regime change. And this is something they aspire to. I've even seen comments from Reza Pahlavi, who is the son of the last Shah of Iran, has said that he would act as a caretaker figure. But we have precedents that show us the terrible consequences that come out of trying to change regimes in Iran, in the Middle East. I mentioned the 1953 example of the coup of Mossadegh, and that's really, contributed to the 1979 revolution and to where we are today. And then we have the more recent example of trying to change the regime in 2003 with the invasion of Iraq. And in that case, the Americans had a figure, an Iranian-American, Ahmed Shalabi, who they saw, as a potential transition leader. Again, this failed. I don't think there's anyone outside of the country that would have enough support across the country to really lead any kind of peaceful or even smooth transition. I think it would be extremely complicated. The power vacuum would be substantial, and the reverberations for Iran, for neighboring countries and globally would be devastating.
Elizabeth Monier with some important context and analysis, Assistant Professor at the University of Cambridge. Thank you very much indeed. Well, on the oil complex now and how it relates to what's happening, of course, in terms of that war between Iran and Israel. Iran is racing to get its oil out into the world. It's a sign of the unusual logistical steps that Tehran is undertaking as the US, of course, mulls joining Israel in bombing the Persian Gulf state, though we do apparently have this 2-week window of diplomacy. Let's bring in Bloomberg's European oil team leader, James Heron, for the details. And the team, James, you and the team have been doing a deep dive looking at satellite images in terms of what Iran is doing with its oil supplies. What are we finding out?
Well, what we're seeing is, as you said, they're trying to rush as much crude out of the country onto global markets as they can. We're seeing a lot of oil being put into storage tanks, their main export terminal. We're seeing a lot of tanker activity. And this is all geared around the world's biggest oil choke point, the Strait of Hormuz, because obviously if the war spills over into drawing in Gulf infrastructure about oil tankers, then Iran will have as much trouble getting its oil to market as the rest of the countries will. So, and as you say, you talked about the weakness of the country. Oil exports are really Iran's economic lifeblood. So they want to be sure that they can get as much of this product to sell out onto the world as they can.
Is this a suggestion? I mean, maybe this is a geopolitical question rather than an oil markets question, but this is a suggestion that they're trying to shift this oil and then they'll look to close or block the Straits of Hormuz. Is that how we should read it? I mean, how are we thinking about the Straits of Hormuz as a risk, and some of the analyst pricing around where oil goes in that scenario? The volatility around oil has been acute.
Yeah, that is always the big fear of any conflict in the Middle East, particularly one involving Iran. Given the relative weakness we've seen in Iran, there's questions about whether it could really block the Strait of Hormuz in that way, in a sort of a naval sense. But certainly we've seen in the Red Sea through the Iranian proxies, the Houthis, they can harass shipping with drones a very sort of asymmetric way and cause a lot of problems. So, yeah, if the war gets to that stage, we could really see a lot of disruption to crude shipments through that area. And we're talking about Saudi crude shipments, Kuwaiti, Iraqi, a lot of oil.
Yeah. LNG, meanwhile,
yes.
Pricing has edged up this week as well. What are you looking at when it comes to LNG and the flows from that gas product?
The Gulf is a hugely important area for LNG too. Qatar is one of the world's biggest producers. And again, it's the same
Does
story.
Does Qatar have to go through the Straits of Hormuz?
It does.
LNG?
Yes. So the same shipping lanes that are carrying all this crude oil to markets, also carrying a lot of LNG to market. A lot of that, even though it's summer here, a lot of that is still coming to Europe because we've got to restock our gas tanks for the winter ahead. There's been a lot of concern about whether Europe can restock quickly enough over the summer already before this conflict. That had driven up prices, and now with the potential for this conflict to disrupt supplies, it's created a lot of uncertainty, again, on the gas markets. We saw prices spike earlier this week, and they've come off now that Trump has paused and said we'll have these 2 weeks, but all the prices remain elevated.
OK, so some of that's going to come home, potentially, in terms of winter fuel costs and energy prices in Europe. James, thank you very much indeed on oil, on LNG, and on the risks, of course, to the commodity space when it comes to the Iran-Israel war. James Heron, of course, leading our European oil team coverage. Now, Bloomberg has learned, switching focus to tech now, Bloomberg has learned that SoftBank is looking to team up with TSMC in what could be its biggest ever bet. The plan involves $1 trillion industrial complex in Arizona to build robots and artificial intelligence. Let's bring in our tech reporter, Min-Jung Lee, one of the authors of that Bloomberg scoop. And what a scoop it is. Really fascinating. Loads of questions involved in this. The ambitions of Masayoshi Son. What do we know, Ming?
Mm-hmm. Right, so this would be another completely new business model for SoftBank and also for Masayoshi Son. Because hardware could be a strong feature in this manufacturing AI hub. And Masayoshi Son has been toying with a lot of different big project ideas. And for now, as we know, this manufacturing AI hub is one of the more significant one of them. But there's still a lot of questions that need to be addressed, including who will actually participate in this project. We do know that SoftBank and Masa is very keen to have TSMC on board, in which case chips would be a key feature of this hub. And we know that robotics, industrial robots powered by AI, could turn out to be a strong feature in this complex as well. But we'll really have to see how things evolve from here and how the participation goes from tech giants, AI giants, and whatnot.
What does it tell us, do we think, about SoftBank's vision, the vision of Masayoshi Son? He seems fairly squarely focused right now on AI and trying to make sure that SoftBank has a clear stake, a leading stake in terms of that AI revolution.
Right. He's very invested in contributing to the development of AI, trying to be the leader in this space. One thing we do know is SoftBank is definitely shifting away from the fund model that we saw with the Vision Fund, where SoftBank was investing in hundreds and hundreds of startups to see which one would hit the jackpot. But now he's invested into AI and what really could push SoftBank into that field. To kind of something that could help Masa rebuild his legacy as the SoftBank founder. As we reported before, he now has at least 3 big projects at hand. The Izanagi chip project, which is being done a lot by ARM, the chip unit. And as we all know, there's the Stargate data center project with OpenAI. And now adding to all of this is the new Arizona AI manufacturing hub that will be that is backed by Arizona government officials and hopefully TSMC as well, but really we'll have to see how anything unfolds from here. It's still very early days, so I guess we'll have to see maybe, I don't know, 5 years and 10 years, we'll have to see which one turns out to be the right choice.
Yeah, we're going to look back, aren't we, at some point in history and see whether or not Massa placed his bets well or not. He's got a mixed history, of course, on that front. A great scoop from you and the team, Mingjung Lee, in Tokyo, with that scoop around SoftBank's ambitions with $1 trillion potentially being lined up for Arizona. Now, following the launch of the BTech Europe show today, I'm going to be hosting a live audio Q&A with Bloomberg experts on the opportunities and challenges for Europe's innovators in the AI race. Terminal and digital subscribers can pose their own questions, and you can listen in at Bloomberg.com live QA. That's at 1:30 p.m. UK time. Coming up, Rheinmetall replaces Kering in the Euro Stoxx 50. Today, it is a story of Europe's resurgent defence sector and the struggles in the luxury space. We have the details next. This is Bloomberg. Welcome back. German defence firm Rheinmetall replacing Gucci owner Kering in the European Stoxx 50 benchmark today. Charlie Wells is here to talk us through the change. So we go from defence, we go from luxury to defence, and it tells a bigger picture. This is significant, not just for the companies involved, but more broadly in terms of how we think about the focus on defence versus the challenges of luxury.
I mean, Tom, at the end of the day, if you want to play with the big dogs in the Euro Stoxx 50, you got to keep your share price up. And Rheinmetall certainly did. They had an excellent May. They surged 26%, and that actually gave them a market value that was bigger than half of existing Euro Stoxx 50 members. So they are getting fast-tracked into this blue chip index. Emphasis on blue chip, and this has got to be painful for Kering because they are now out, and basically this, doesn't bode well for their share price, which has already been struggling this year. They hit a low point in April, and they've just really been struggling, I think, really on the back of Gucci. Kind of that is one of their main revenue drivers, and that company has had a hard time kind of finding direction in the fashion space recently.
What does it tell us then, all of this, about Europe's economy and where the money's going?
I think there's kind of two things here. So it's that big picture theme that we've been hearing all year, which is this pivot to defense, where there is increased defense spending. There is pressure from governments to increase their defense spending. There's, of course, a NATO summit next week where they're going to talk about 5% of GDP going to defense spending, and a lot of these members are on board for that. There are some sticklers there, Spain in particular, a number of others as well. But, that push from international institutions that is really benefiting European defense firms. And it's not just increasing defense spending, it's sourcing defense spending. So where are you getting this material from? Is it coming from Europe or is it coming from the United States? Because in previous eras, of course, even when European governments wanted to increase defense spending, they were buying American munitions. And so the issue here, and what is really giving Rheinmetall this boost that we're seeing, this really astronomical boost that has really fast-tracked them into this index, is that European sourcing component.
And that's crucial. And we know that's part of the political debate as well in terms of how to allocate the funding. On the luxury space, Kering, the turnaround, you talked about the travails at Gucci. China's an issue. The product mix arguably is an issue. What is the turnaround story for Kering, if there is one?
Yeah, so I think the question is, could Kering ever come back into the Euro Stoxx 50? And I think turnaround, as you say, is a real dilemma that they face right now. They just brought in Luca Di Maio from Renault. He is known in his 5 years there as having been something of a turnaround expert. The share price there doubled under his tenure, almost doubled under his tenure. So that could bode well for Kering. You know what? I also asked this question. I looked back at some historical numbers. I love a little financial history. And basically, I kind of asked, what companies have fallen off the Euro Stoxx 50 and then got back on it? And actually, back in 2011, Unicredit and Nokia fell off. If you were going to guess who made it back on, it's actually both of them. They're both on the Euro Stoxx 50 now. So just because Kering's falling off doesn't mean that this is, a forever change, but they would have to have significant share price momentum. And then there's also the flip. So you got Rheinmetall really getting into this kind of velvet rope guarded index. They get this momentum. ETFs start buying in. Eurostoxx 50, that underlies some 25 billion euros in ETF assets. So that momentum really helps stocks that get in there stay in there.
Wow, 25 billion euros of assets, and some of that fund flow going to Rheinmetall. The passive flows are going to be a boost. But as you say, maybe we're going to be seeing the Luca De Meo, who's the incoming CEO of Kering, picking up the phone to Orchel over at UniCredit in terms of how you get back in once you've dropped off the StoXX 50. Thank you very much indeed for breaking it down for us. Charlie Wells on Rheinmetall, part of the StoXX 50, Kering falling off. It's been a busy week, of course, for central bank policymakers. At least 18 central banks representing more than 40% of the global economy have delivered decisions. Let's bring in Bloomberg MLive's Sven Ram, who's standing by patiently for us in Dubai. Switzerland, Sweden and Norway. Norway was the surprise. What was behind the moves, Sven?
Morning, Tom. Yes, it was a complete surprise. It upended the market expectations and sent the krone tumbling. Actually, if you look at the May inflation for Norway, it was softer than forecast. It came in below 3%. But what we have seen in the cycle, Tom, is that each time it's come below 3%, it's not been able to stay below that level. Each time it's popped back higher. So the markets were thinking maybe Norway won't be able to cut rates yet, but as we discussed, they just upended the market thinking. Why did they do that? They did that because, increasingly all these central banks are becoming wary of the impact of tariffs on their economies. These are all small economies. These are all economies that are open to trading. And therefore, it wasn't a surprise that Sweden, Switzerland and Norway all cut rates. Now, interestingly, Tom, if you look at the exchange rates, some of the best performing exchange rates this year are in fact from Sweden, Norway and Switzerland. And therefore, that kind of tightened monetary conditions a bit, and therefore it gave them room to cut rates. And that is what they did this week.
Was it right that the BOE stood on hold, then? I mean, I'm just thinking of the data, the labour market constraints. Are we going to get to August and the BOE has to go for a big cut, maybe 50, given what is happening with the data front here in the UK?
Absolutely, Tom, because I think that, the BOE, the next rate cut is not so much in question, because I think that more policymakers than others are inclined towards a rate cut. But the question is what happens beyond August. And if you look at the UK's economy, it's an economy that's mighty vulnerable to the threat of imported inflation. And with crude prices having surged 20% this month, it leaves them in a pretty vulnerable position. And if you also look at the history of the UK, Tom, in the past decade, headline inflation has averaged 3.1%. So if they get to 4%, that will be about as loose as a policy as they can get, because if they continue cutting rates in the face of the historical evidence on inflation and the threat of imported inflation, I think they are setting themselves up for an overshoot in prices yet again. So I'm not too sure that the BOE's policy committee as a whole will want to get themselves into the situation and rekindle memories of what happened in 2021 and 2022 when inflation got into double-digit territory.
Sven Ram from MLive, thank you very much indeed. European futures pointing lower as the US looks to reopen. Bloomberg Brief is next. This is Bloomberg.